What's going on, guys? This is Blockbird Cryptocurrency coming at you with another video. Market cap is at $328 billion. Within the last 24 hours, Bitcoin is down 1%. Ethereum is neutral. It's neither up or down. And Litecoin is up about a 0.5 percentage point. All right. So I have to make a confession, guys. I am a crypto bear. I am bearish on this market. Now, before you hit that down vote, try to hear me out and take something away from this video and see what you can gain from also being bearish on cryptocurrency, at least in the short term. I think many of us are long-term bulls, but it's important for us to have realistic expectations when we are trading in this market. And something that I've noticed with a lot of YouTube channels is that there's this constant state of rah, just crypto market is great, we're all bullish, keep buying more. And this is how a lot of people end up holding backs by being overly optimistic. And in fact, I think bear markets are the best markets to invest in, because this is when you find bulletproof entry points. If you purchase Bitcoin at 6,500, which was the price of Bitcoin during the last recent major dip, or if you purchase Litecoin at $105, which was approximately the price during the last recent major dip on February 6th, then those are bulletproof entry points. So while we're still in this bearish trend, you're still up overall. So crypto isn't about necessarily all about cheering for your favorite project and just trying to pump it up. Rather, it's about finding optimal entry points and being realistic about the movements of markets. So let's take a brief look at Bitcoin and discuss some techniques and how we can plan investing in Bitcoin, and if not Bitcoin, at least finding the larger macro trends of the market, because typically the direction of Bitcoin determines the fate of the market at large. So let's get a 3-month overview of Bitcoin. So this is the February 6th dip from the Tokyo Well, Kobayashi, the lawyer for the Mt. Gox trustee. And Bitcoin got as low as 6,800. I actually remember it a little lower. So maybe CoinCheckup has not aggregated all the charts, but I remember it roughly being around 65 or so. But that was during the most recent major dip. So something with dips, you can look at them as new support lines. That is to say, the floor for how low a cryptocurrency can go in the short term after a recovery. So after this dip for Bitcoin, a support line was created of $6,800. And then we had a bull spike here and up to 8,700. The bears came in, but they didn't really take control. It dipped a little bit to 8,200. So that you could call that maybe a support, but I don't think that's deep enough to call that a major support line. this was probably still the major support line during that period. Then you had a major bull run here up into late February, and Bitcoin hit 11,600. So now once the bulls got Bitcoin down, got it up, the bears came in and brought it back down to 96. So here was a new resistance point, and here was a new support. So now the new support was 96 and resistance was 11,000 between February 20th and February 25th. Let's continue going through the market. So here are the bulls trying to take control. They get Bitcoin up to 10,000. They get a little more, 10.7 and 11.5, and 11.6 was our last resistance. Okay, so the bulls were not able to penetrate that resistance point of 11,600, and from there on it's been going down. They broke through that last support of 96. Okay, so the bears have been in control, so that's 96. Bulls came back in, got it up to 92, dipped some more, now 8,100. So that's a new dip. And they really have been in control since. Another dip, 7,600, and we've been hovering around about 8,500 up to 9,000, which seems to be the new resistance and support. And we are dipping below that 8,500 mark. But what I'm really looking at is this major support of 6,800. And even if I don't want to be as bearish, 7,600, which we're not far away from. And if you look at this trend line, we are slowly coming down and trying to discover a support. And so what does this mean for Bitcoin? Well, I think this means that you probably should, and myself included, should be accumulating fiat to purchase Bitcoin once it hits a major support line of 76, or even if you're really bearish, $6,800. And so why am I not overly optimistic? Well, institutional investors, or even smart money, is standing on the sidelines, and they're looking at these support levels. And I think they're waiting for something that's a little more optimal. 8,500 as a support has been on somewhat shaky territory for the last couple of weeks. Whereas 76 and certainly 68 are much stronger support levels. So if you're an institutional investor, let's think about that dip buyer from that Kobayashi dip, that dip buyer who spent, I believe it was $400 million on Bitcoin. Well, he or she was dollar cost averaging, and I think they averaged around, I think it was a little less than 8,000 per Bitcoin. But their largest purchase was made near the bottom of that dip of $6,800. So if you have a lot of money on the line and Bitcoin has yet to revisit these major support lines, what would you do? Would you jump in and just say, oh, you know, it'll go up, just simply because you feel good about it? Or from a technical level, are you going to play it cool? Are you going to sit it out and wait? And, you know, a lot of people may say that, well, it's a missed opportunity. What happens if it shoots up? And that's where you have to do your cost benefit analysis. Is it better to have invested fiat in a market and run the risk of losing it because you did not find an optimal entry point? Or is it better to hold your fiat and accumulate more fiat and to have never lost any at all? And I think institutional investors tend to bend towards the latter. Cash is always king, especially in a bearish stock market. And that's something you also have to keep in mind. We know that in many respects, the equities market has largely been propped up by somewhat of a sham of an economy. And the stock market is highly inflated. So while long term, yeah, central bank money sucks, fiat sucks, but in the short term, when people are fleeing out of equities and trying to find other places to put their money, they are going to be going into fiat as a safe haven, and of course gold and even crypto. But the first place they're going to go to is going to be fiat, which is going to cause deflation, or i.e. raising the price of USD, Euro, etc. So while it may seem that in this day and age holding fiat is a bad idea, because of course it is eaten up by central bank interests, but anyone who knows markets and has been watching the equities markets, the bonds market, knows that come, could be next week, could be next month, it could be several months from now, but there's going to be a crash in the stock market, and those investors are going to be fleeing towards cash. So if you're holding fiat, and let's say Bitcoin shoots up and it doesn't hit those major supports that I'm saying that it probably will, and you miss out on that boat, you miss out. But in the meantime, you're still holding fiat, which, if anything, you could park it into precious metals if you miss the next Bitcoin pump, if you're holding fiat. And of course, gold, silver will shoot up, but one precious metal you may want to look at if there is a major crash is probably platinum, where you could park your fiat, because actually platinum tends to go down when markets crash. So you could find an optimal entry point with that if you don't trade Bitcoin in the short term just because you missed that pump. And let's just look at the entire market. Let's look at the trend line for the last year. And I want to ask you, if you take this macro look at the market, does that look bullish to you? Well, okay guys, thanks for hearing me out. Let me know in the comments what you are. Are you bullish or bearish in this market? What do you think is the major support for Bitcoin? Or any other cryptocurrencies you may have in mind, Litecoin, Ethereum. Let me know in the comments. But I just wanted to share this with you and give you my strategy. Hold on the fiat, waiting for prices to go down a little bit more before I accumulate more crypto. And you can do something different if you want. This is my personal journey. It's not financial advice. But I just wanted to share with you my mindset. Well, I'll talk to you guys later, and peace out.